Investors, hello. This is AI Crypto Insights channel, giving you a few minutes of AI-powered insight into the market. Just a reminder, this is for educational reference only, not investment advice. Today, we're going to dig into some incredible analysis from Kevin Helms and Cindy Fang on two huge shifts that are, well, they're changing everything in the crypto landscape.
Okay, let's just jump right in with the number that has everybody talking. By the end of 2025, BlackRock, the world's biggest asset manager, was holding about 771,000 Bitcoin in its ETF. Now look, that's not just some random statistic. That is a statement. It's a massive, massive vote of confidence from the institutional world on a scale we have literally never seen before.
All right, so to really get our heads around what's happening, we're going to break this down. We're looking at it from two angles. First, the capital front, where all the big money is coming from, and second, the infrastructure front, how the miners themselves are evolving. Then, we'll tie it all together.
Okay, first up, the capital front. Let's talk about the giants finally arriving on the scene.
So let's break these numbers down, because what's really mind-blowing here is just the sheer scale and speed of this thing. We're talking almost $67.5 billion in assets under management. And get this, it's not just the biggest Bitcoin ETF out there. People are calling it the most successful ETF launch in history, period. And for BlackRock itself, this has become their single most profitable ETF. That tells you everything, right? Digital assets aren't a side bet anymore. They are a core part of the game plan.
But this huge institutional bear hug, it wasn't always like this, not even close. To really appreciate just how far we've come, we've got to jump in the time machine and go back to 2017. Back then, BlackRock's CEO Larry Fink had let's just say, a very different opinion. He literally called Bitcoin an index for money laundering and thieves. Wow, talk about a change of heart.
And I mean, look at this. This comparison just shows the complete 180. It's incredible. He went from calling it a tool for criminals to now he's calling it an asset of fear. A safe haven when currencies are getting weaker and the world feels a little shaky. But he doesn't stop there. He's talking about it being the beginning of the tokenization of all assets. That's not just a change of mind, folks. That is a fundamental shift from pure skepticism to a massive strategic vision for the future of finance. And look, this new vision, it's not just some philosophical idea. He's actually putting numbers to it. Fink himself has floated scenarios where if these giant sovereign wealth funds, the massive government-run investment funds, put just a tiny slice, like 2 to 5% of their cash into Bitcoin, we could be looking at a price of up to $700,000. That just shows you the colossal scale of capital that he thinks is still sitting on the sidelines, just waiting to come in.
All right, so that's the demand side. Let's switch gears and look at our second front, the infrastructure. Because with all this new money pouring in, the folks who actually secure the network, the miners, they're going through a pretty radical change of their own.
Which, brings up a really important question, right? If all these huge institutions are buying Bitcoin for the long haul, the network has to be secure. So who's actually keeping the lights on? Who's securing this multi-billion-dollar asset? And maybe more importantly, how are they doing?
Well, when you look at the performance data, it's like night and day. A huge split. Check this out. On one hand, you've got these hybrid miners. These are the ones who are doing more than just Bitcoin. They're also getting into AI and high-performance computing. Their stocks up over 200%. Then you look at the other guys, the pure play miners focused only on Bitcoin, and they're mostly in the red. The market could not be screaming a clearer message.
So what's the secret sauce here? What do all the winners have in common? Well, if you look at the top performers, Iron, Applied Digital, Cipher Mining, they've all locked in big contracts for AI or high-performance computing, which is basically them renting out supercomputer power. They're using their existing infrastructure to make money from the AI boom, and boy, are investors paying attention to that.
But here's the thing. It's not quite that simple. You can't just shout AI and expect your stock to go to the moon. Several other miners who've talked about AI still posted negative returns. What this tells us is that the market is smart. It's not just rewarding the idea, it's rewarding actual execution. Investors want to see the contracts, they want to see the revenue, they want to see that this AI pivot is the real deal.
CleanSpark is the perfect case study for this. For the first half of the year, they were all in, Bitcoin only, and their stock was, not doing great. But then a leadership change brought a new focus. They started seriously exploring AI and HPC revenue streams, and as soon as they started making real moves in that direction, boom, the entire story flipped. The stock went from being down to being up for the year.
It just proves a point, you know? In this market, your narrative is your strategy. The story you tell Wall Street, well, it better be a good one, and you absolutely have to have the action to back it up.
So what happens when we connect these two powerful fronts? What happens when you get this massive flood of institutional money crashing into an infrastructure that's pivoting hard into AI, maybe the biggest tech trend of our lifetime? Well, what you get is this powerful convergence, kind of like a perfect storm. First, you have giants like BlackRock giving Bitcoin the official stamp of approval as a serious asset. That's step one. Then, step two, the actual machinery running the network is getting stronger and more profitable by plugging into the AI megatrend. The result? You have all this serious capital flowing into an asset class that is increasingly secured by and linked to the AI revolution. It's a whole new ballgame.
And that leaves us with a huge and honestly pretty provocative question for the future. What really happens when the world's largest asset manager starts buying up an asset that's secured by the world's most critical new infrastructure, AI? The implications of that, well, they're just massive. AI analyst verdict. The crypto market is maturing on two fronts, with institutional validation meeting a more resilient AI-integrated infrastructure, fundamentally changing the risk and growth profile of the entire asset class. What do you think about this convergence? Let us know down in the comments. We'll see you in the next explainer.